Hello and welcome again on Stocks Advisor channel. Today we will talk about BioCryst Pharmaceuticals Incorporated, traded at Nasdaq, ticker name BCRX. Well, you can see that BCRX today made really nice plus 12.07%, finishing at 14.39. After hours, some slight volatility, almost zero volatility, let's say, is taking place. Now the question is, what's next for this stock? Because you can see really a very nice growth here that we went all the way from end of previous year. Then there was a period, let's say, of correction and some volatility that took place from mid of March all the way to beginning of May, and now looks like we are forming a new growth let's say trend, and seems like that there is kind of a trend forming. Let's draw it a bit thicker. And why is it interesting? Because this trend looks to be just a parallel shift of the previous trend after some let's say after some correction that took place. So if you would think of this, so if this we would consider a correction, it looks like we have a formation, let's say, of a new trend, and we will see after next three bounces. But we had already a couple of rebounces on this line, the second thick line. So if this is continuing, if this is going to grow further, well, this would be really, really nice. But still, what we need to do, we need to reconfirm piercing of this resist level, because this was there formed previously. We slightly did pierce it today, but we will see if it won't work as a very strong attractor, because it might indeed. And with this being said, if you would ask yourself how to buy here, still how to trade, well, we need to keep in mind that what might happen is a pattern similar to one that took place by 6 and 7 of May, when after big white candle we had actually correction and return back to this trend line. Let's call it R1. And so R1 works here as a support, but also as a negative attractor if the price is too high. Therefore, it would be advised a little bit to wait here and prepare to buy a little bit lower. So let's pull the chart here to draw those levels. So the best way to buy here would be indeed in the vicinity of the let's say of the levels that were formed previously here. So it's the one at 12.95 and actually the current high of 13.96. Why this? Because if we still have a red line there, and let's say there will be some rebounds from the R1 level, then we know that this would be a primary level to buy and we grow further. If not, still we know that at least it will be the ending point, because the R1 will work as a very strong attractor, and then we will know how to average down further. So this is the primary level to buy, where we can expect to have a profit. And let's write it again. So it's between 12.95 and 13.97. So this is our primary level from where we expect to grow further. And here it's advised to take a profit from 10 to 15%, so it's a classical normal trade advice without any extra volatility is expected. But also what we need to keep in mind, and now we're talking about risks mitigation, and risk mitigation will go for two levels. So first will be the technical one, and second one will be the, let's say, the market risk mitigation or negative catalyst risk mitigation. So talking about this, why do we need this first of all? Well, because we are already we are growing, yes, from R1, but there are some indications that this might soon stop, because RSI is trending upwards. You can also see that we are making a secondary upwards wave MACD wise, so it's still not on the top, but once it's there, it might decline further. So R1 will start work as even more attractor. And also, if the first primary level is not working, we don't need to forget that there is quite big, let's say, void or distance between moving average 200, the red line, and moving averages 20 and 50, this blue and red line correspondingly. Why is this important? It is important because the bigger the distance is, the stronger, let's say, it might attract or suck in the price, simply speaking. And you can see here that level is about roughly 30, let's say 5% from R1, and if you go from the current price, it's roughly about 47.3%. So it's quite a big one, so it might work as a strong attractor of the price. If this is going to happen, then we know about our next level where we can buy, and this will be of course here. It's between these two levels. It will many times formed and reconfirmed. Actually, this will be between 903 and actually 1033. So this is the secondary technical pattern based on the fact if the first one is broken and not confirmed. So there we can buy again and average down. How to average down we will talk at the end of this video. So let's write it here. This is the secondary technical pattern where we can buy. And of course the last thing that remains for us is to take into account any negative catalyst that might kick in. If any, it's not expected at all, but if it's happening, the price could really decline, and we just need to buy the very principal levels here, and those are of course obviously here between 680 and 773. And why is this level is also very nice is because the moving average 200 is there at the bottom. At the top by this, if the price will decline there, it will be on the top of this channel. So this channel will really work as a double support, and therefore quite safe area where you can do the final buying in if we have this decline. And again, it's not that it's expected to go there. I always keep saying this. It's just the risk mitigation, because we don't talk, as you have noticed probably, about stop loss, but we only talk about buying more non-linearly and exiting with a profit. So we tune our trade for profit and mitigating all losses. In this way, at the end, once all risks are mitigated, you have a profit or you finish with a draw in a worst case scenario. So this way of trading is, let's say, requiring maybe a little bit more days, especially we are going to the second or third levels, but it won't require you to do stop loss or to pay with money for your time. And sometimes, well, often this is a good solution if you are not trading really on the minute or 15-minute candles every day. If you're just trading through the days, this I think is very nice option to consider. So with this being said, these are 3 levels to buy. And if you ask yourself how to buy, of course, we do it non-linearly. So we, let's say, split money on several levels to buy here. And because this one is still more, let's say, safe, we don't do the 5 portions play, we do 4 portions play here. What does it mean? It means that the funds you would like to play here, you can split in 4 portions, then you can buy with the first portion in the first channel. If the primary technical channel is not confirmed and we decline all the way to 903, 1033, then you can buy with another 1 portion. And if there is any negative catalyst kicking in, then you can buy with remaining 2 portions in the lowest level. This way, it will be best optimization for profit versus loss, and actually you should exit with a profit. And whenever you take a profit, 10 to 15% from all money allocated in the position, take it, re-enter if needed, but don't wait too long. Never hesitate to take your profit, because otherwise the position might expire and you will be running out of funds to average down further. So with this being said, this is the way to trade with BCRX. Very straightforward, already growing. Of course, R1, if it's confirmed again, will really define a new trend. But also, if you buy in time, should be very nice position. So good luck with this one. Don't forget to subscribe to our channel if you liked analysis. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.